Hello there. So, like I promised on my X profile, I was in a trade on last week, Friday, the 13th of December. Friday the 13th. The algorithm that I have written around the 2024 mentorship gave me two trades Friday with my live equity. We had one here around 10:30, and we had one at the end of market around 15:30. So let's break it down on what I saw basically when we arrived at these times. So let's go to the opening. As you see, I already saw previous day highs and lows, and that we also already started from 7 a.m. like the pre-market highs and lows as well. We have market open, we have a gap of 180 handles. So according to the 2024 mentorship, this is something that we are able to trade. We like to trade. Let's see when first presentation gets here. So we take out a pre-market high, leaving us with more pre-market lows, meaning we are currently in a premium. So first presentation for value gap gets created here right now, but right now it's still red. Red means I cannot trade it according to my algorithm. After 10, we get the opening range high and low. So this low to that high. And you see that right now the fair value gap turned green. This means that we have more sell side liquidity to the downside than we have buy side liquidity to the upside. And with several other algorithms like the NDOC bias is bearish, the NWOC bias is in this case I have no bias on it. Weekly liquidity bias is also is in agreement with the premium opening range gap, as is the daily bias, the pre-market bias, and the London bias, liquidity bias. So right now, the algorithm has given me a green light to start trading. And remember that we are looking for sales currently, according to the NDOC, the NWOC, and the liquidity biases of the previous three daily highs and lows, as of the pre-market bias and previous week high and low. So we closed below the first presentation, and everything tells us that we should go for sell side, meaning that we can place an entry minus one tick below first presentation and one tick above the fair value gap candle high of the first presentation. And from here, it's actually quite simple. So we have a gap short, we enter, and basically we take off positions at 25% midpoint, and sadly we create a ton of equal lows here on the 75%. And you see that I have one contract there, one contract there, one contract there still remaining. The sad part was that we create a lot of equal lows here and we never take it out. So I was like, oh, equal lows, nice. We probably take it out during lunch or something like that. But no, actually what happens, as you can see, we just continue going up. We hit my break-even stop loss, there it is. And the fair value gap turns red again, so that I'm not allowed to trade yet. Why is that? Because something on the lower time frame and the higher time frame doesn't correspond together, so we have to wait. So right now, another 30 minutes of pre-market liquidity has been created, and right now we see that the gap turned green again. Why? Because there's more sell side liquidity than buy side liquidity according to the algorithm. So we can place an entry right here with a stop loss there again, and you see that basically instantly go to the downside to the end of day, and I close all my orders at 16:14 because I noticed that that's just for me the best time right now. I'm experimenting with 16:30. I'm logged in my AMP Live account. As you can see, sold 6 contracts there, bought one there, bought one there, break even, exit here, sold 6 contracts here, and then again I bought at the 16, 15, 14 candle. And that was my live trade of last week, basically. You don't need this algorithm. This is just for myself. You can do this all manually by watching the 2024 mentorship yourself and figuring out how everything works, because everything that's being done here, I got that out of the 2024 mentorship of ICT. So if you have any questions, leave some in the comments, I would say. Hello, hello, hello. Welcome back to another review of a trade that we took on last week's Friday the 20th. See that we have an opening range gap of a discount gap, indicating that looking at the opening range gap itself, that we are currently in deep discounts, that we are looking for premium prices. We have a gap size of 145.25 handles, which gives us plenty of room to play around with and at least get probably like 20 handles or something like that. As you can see, the NDOC and NWOC algorithms are giving me a bullish bias. So first presentation is created. We see that we still have a bullish bias and that everything is tradable. There is enough liquidity. The daily liquidity bias is also saying that we can trade. The weekly doesn't have a bias currently, but there's enough liquidity. Market London, and the finalized bias is bullish eventually. As you can see, opening range gap for value gap position, we are bullish, as I said, according to the discount gap, and we can trade. As you can see, when the first presentation was created, it immediately placed a limit order. Here we see that where we have to do our take profits and where to go to break even. And as you see, the first trade that we took, we got stopped out, sadly. We took a pretty big hit here, like we lost $870. And in the end, you will see if we end up in the green or in the red, actually. If you were on Twitter, on X, if you follow me there, then you already know how I ended the day. With the strategy that I'm currently running, I'm allowed to take 2 trades. You see it here, trade counter 1 out of 2. We are remaining in that first for value gap. We close above it and we see that we have another trade being given to us by the algorithm. We place a trade with 1 contract less. Why is that? That's due to the loss that we had. The account equity got actually taken down. And one of the rules of the 2024 membership is that you need to have X amount of equity to trade X amount of contracts. So due to that loss, we had to scale down a little bit. We take off, we close above, we tapped the fair value gap once more, and we go up. As you can see, we hit our first target at 25%. We go to break even here. As you can see, break even stop loss pushed above our entry, and sadly we get taken out. If we continue, you will see that from this moment on, price actually will skyrocket. So this was a very nice entry and a good partial taken at the 75% here of the opening range gap. Why does it say that I'm exiting at 25%? That's due to the fact that the entry is placed above the 25, so I scale it up to the midpoint. And due to the fact that midpoint is already reached, I target the next point of liquidity that hasn't been taken yet. So that's the reason why. We did make some money back, which was very nice. I was a bit sad, honestly, that we got taken out and that it then ran off. Turn off the indicator, show the executions. You can see that first trade that we took at first presentation, our stop loss got hit. We took a second trade and we took profits here. And then our break even got hit and we rallied up higher. I'm still happy with this trade. It was very nice. It was a bit sad to see that price wicked us out. Is what it is. We cannot do anything about it. And again, this trade was derived from the new week and new day opening gap bias from the 2024 matchup in combination with the um, daily liquidity of the previous 3-day highs and lows, which indicated that we were bullish on everything. I ended the day in minus 340, so we went from 870 to minus 340. If we did not get taken out, this trade would have, I calculated it, I would have made like on 7 contracts, I would have made around 2 to 3k. Anyway, this was the review. If you've got any questions regarding it, ask ahead. Yeah, thank you for your time, and until next time. Hello, hello, hello. Welcome to another review of the December 30th trade I placed yesterday. Right now it's the 31st. Market is about to open, and that's actually why I also want to start this review with. So not actually with the trade that I placed yesterday, but also what you can expect for today and the way I actually look at trading. Currently, when I look at what my algorithm is giving me, is that it says that the new day opening gap, the new week opening gap, all the biases are currently bullish. And currently we are looking at a premium gap. Because we're looking at a premium gap, your first
intuition would be, okay, we're looking for shorts. But because the higher time frame algorithms are telling me that I'm looking for buys actually, I will not be looking at the first presentation created today as a trade, but actually from a first presentation of an earlier day, which is actually this one of yesterday that's below the opening range gap that will be created right now. Why? Because this one is in a discount and we want to buy in discounts and sell in premiums. So that's actually something very interesting when you do your analysis. Look where you are currently at in price. Are you in a heavy discount, heavy premium, and do you want to sell or buy based on the higher time frame? So if you've got any questions in regards to how that works, feel free to leave a comment or in the comments below, and I will be happy to answer any questions you have about that. So normally I will only go over MNQ on the trades that I took, but today I will actually start with NQ. Normally I always trade NQ on my funded accounts. And I actually want to show you how you can turn a loss into a win when you trade. And you will see why. But yesterday we had a huge opening range gap. We had 315 handles of a discount gap. And in confluences with the higher time frame analysis, our algorithms telling us to be bullish, will be looking for longs this day. And we have our first presentation created here, but we never close above it. We actually go to the first new week opening gap of this month. When this happens, you just have to be patient. If there's not a trade on your first presentation, don't rush it, just wait and see what price does. Because eventually we go up and there is a moment in time where we close above and then it will act as an inversion gap if you follow the 2024 mentorship. And I took this trade on my 2 funded accounts and it turned out to be a loss, as you can see. Actually within 2 minutes I was stopped out, and well, that sucks, because you lose, but it is what it is. And the same trade that I took on my funded accounts I did on my real life AMP account over here. As you can see, I entered with 7 contracts, and I will show the live executions after we have concluded this first review on the algorithm, on my strategy. And on my funded accounts, I'm only allowed to trade once due to the rules that TopStat has. On my live account and AMP account, I'm actually allowed to trade twice. When I took this trade, I was actually down $528. And I was like, oh no, is this going to be a day like this? Eventually, price came back up above the first presentation again, should act as an inversion fair value gap. So I entered with 6 contracts instead of 7. Why? Because of this loss, I didn't have the equity to re-enter with 7 contracts. I had to enter with 6 contracts. One good note to have is that when you have a very huge opening range gap, I myself, when a gap is larger than 200 handles, I halve the exit points of where I originally would take profit. So normally I would take profit at 25%, midpoint 75, full closure 125%, and I have a runner. When there's a huge gap that's greater than 200 handles, I actually will take my profits at 12.5%, 25%, 38.5%, midpoint, and what's in between here. The first trade I had a loss of minus 528. We re-entered and we can see that we can always trust the higher time frame bias because we immediately leave and very quickly we will move to our first profit to break even. So we had our first take profit at 12.5% of the opening range gap. Very nice. We are still not out of drawdown because right now we are only up, I think it was $200 or something like that. And I will actually get out of drawdown when the 75% or the 38.5% in this case gets hit. But that's okay. We currently have a small profit. We halved the loss that we already had, and we are right now at break even. If we follow price, what we see is that it bounces from this new day opening gap to this one, but it doesn't really go below the new day opening gap of the 19th. We never close below it, and we actually attempt, you see the price is trying to push higher, and that we actually have our second take profit over there. And if we just let price do its thing, we have our third take profit, and eventually also our fourth, And then if we let price run, we will just barcode a little bit around the end day. We hit our break-even stop loss with the 2 remaining contracts that we had here. So our exit 125 and our exit runner get hit on break even. If I followed my algorithm to the T, like to perfection, and only used those exits, then I would have been in profit of around, I think, $800. As you can see, we went from 15,500 to 16,469. I myself, during trading, I wasn't able to be here entirely. I will now show my real executions that I did. You can see the first execution here, buy of 7 contracts. We got stopped out. Our second attempt, we buy 6. We sell 1 here, sell 1 there. And the last 2 exit points, I actually sold 2 contracts on those 2 because I actually had to spend time with my girlfriend. So instead of letting those 2 run, as you can see, as you saw before, I actually had a way better exit point eventually, if you can see what price has done over time. So instead of having $800 in profit that day, I actually had 1120 something. Hopefully, if price closes below here, we will actually be able to be looking at a other buy because we are buying from a deep discount. And we will see what price does. So if you have any questions, leave them in the comments, and then I will talk to you guys next time. Hello, hello, hello. Welcome back to another review. Today we will be reviewing the trade that was placed on the 31st of December, the last trading day of the year. And this will not only be a review, but also a small lecture on how I actually start my daily analysis. Next to that, I will also teach you in this review, this small lecture, how you could trade the counter side of an opening range gap. So normally when you trade a premium opening range gap, you will be looking for shorts, and when you have a discount opening range gap, you will be looking for longs. Now, in today's review, you will see how you can actually trade the opposite side and when you should look for that opposite side trade, because this is not something that happens daily. This is something that happens every now and so often, and it's actually fun that it happened on the last trading day, and it actually had a very nice result for me myself. Next to that, you will also be given an update on how I will be continuing this channel and what you could expect from me. So let's first start off with the review of today and what steps I always take. So before 9:30, I always check what the current status is on the opening range gap. So right now I have outlined 2 lines. This line, which is the opening price of 9:30, and this striped line, which is the settlement price of yesterday. As you can see right now, we are in a premium opening range gap. We have created a premium opening range gap, which indicates that just from looking at the opening range gap, that we are right now with price in a premium, and that we should be looking for shorts. But when the gap is created, the first candle has printed. As you can see, we have a premium opening range gap with a gap size of 67 handles. But when we look at the algorithm for the new day opening gaps, the new week opening gaps, and liquidity biases, then we will see that everything turns out to be bullish. And what does this actually mean? Well, if the new day opening gap and the new week opening gap is bullish, that means that there are more clusterings of those gaps to the top side than to the bottom side, as is the most recent one is also to the top side instead of the bottom side. And then with some smart calculations, I get the average for being it bearish or bullish. That is basically the new day opening gap and new week opening gap bias. So as it is taught in the 2024 mentorship of ICT. The next thing that I look at is the weekly liquidity bias. So is there liquidity for example, if the new day opening gap bias is bullish, is there still liquidity left to the top side for the weekly candle? In this case, yes, there is. And the same is for the daily bias. Like in the mentorship of 2024 of ICT, it is thought that you should look at the previous 3 daily highs and lows. So in this case, is there more liquidity to the top side than to the downside on the daily? That means that we are also very bullish, because right now that would indicate that we are in a discount. And if we zoom out, you see that the red lines is the sell side liquidity and the blue lines are the buy side liquidity. Right now we have 4 buy side liquidity pools and 2 sell side liquidity pools, indicating there's more liquidity to the upside than there is to the downside. So that indicates that based on the liquidity level, that we are currently in discount and potentially moving from discount to premium. Combine that with the bias from the new day opening gap and the new week opening gap, being bullish with the most clusterings above in this case, you should be looking for bullish price action. But when you combine that with a premium opening range gap instead of a discount opening range gap, you first would have to wait for price to come to a local session discounted price. And why do I say that? Because if we have a premium opening range gap, it already says it, we are in premium price. We are right now at the opening itself, we would be looking for shorts. But the higher time frame is saying bullish, so we do not want to enter here yet. And how do you combine that with first presentation? Well, just as looking at the previous 3 daily highs and lows, you also can actually draw further, like draw the first presentations of the previous 3 days out. So we have one here, and today's first presentation still to be formed. If we look at price, we already know that this first presentation is in heavy premium. So we are not looking for a trade from this fair value gap. If we are looking at this opening range gap, this first presentation fair value gap is actually in a discounted price compared to where the opening range gap currently is. So without seeing the current day's first presentation being formed, we already know that if price actually comes to this first presentation, that is in discounted price compared to the opening range gaps, so it is in discount for this session, we know that we can potentially expect a entry drill, a reversal at this price point. So let's see what happens when first presentation for today gets created. So first presentation here is right now created, and as you look at the price, since we are looking for bullish momentum and that the current first presentation is in the premium area of the opening range gap, it is described as a bearish fair value gap for this session's liquidity and opening range gap. This fair value gap, however, is classified as bullish, as I already mentioned. So right now we have 3 fair value gaps. Today's, the one of 2 days ago, and today's and the one of 2 days ago are both in premium price, while we are looking for bullish momentum. So we already know that we cannot trade from these 2 first presentation fair value gaps. So the only bullish first presentation is this one. So in a lecture of ICT, what he mentions is that when you are utilizing previous used price ranges, you want to see that they become a balanced price range. And you can perform the same concept of balanced price ranges to fair value gaps a little bit. So if we would want to utilize this previous day's first presentation for a bullish trade to make it a balanced price range, we want to go through it, above it, and reject to then go up. So this is how you would utilize the theory of balanced price ranges, to my understanding. That's very clear that this is to my understanding. Perhaps ICT will explain it further later on, but this is to my understanding how I utilize it, how I myself utilize it, and I have seen great results so far with it. That's why I made this strategy, so that I can actually know how profitable my strategy right now is. So anyway, so if you want to do a counter trend trade in comparison to the opening range gap, you would have to search for a first presentation for value gap that is in this instance in a very discounted price, so below the opening range gap. You want to see it being moved through to the downside, then to the upside, and then do your basic first presentation entry. So let's have a look on how that looks. So price in the first few minutes, it is moving around. It's nothing very important is being done right now, but this is the first indication. Finally, now we are starting to pay attention because the price has moved and closed below the previous day for value gap, moves up, and then we close above it again. So we have gone below it and above it. So we have that paint roller analogy from ICT. We have gone to the downside, to the upside, and then down again. And then it is filled in with the paint. So because of that, we can place an entry as what we normally do. And for trade purposes, you will then still target the 25 midpoint and 75%, but in this case it will be in reverse because this is a premium gap, so 25% is here, midpoint is there, 75% is here. So for your counter trend trade, your first target will be 75%, then midpoint, then 25, then full gap closure, reversed, and then 125%. Why you see why you see that my current take profit on the 75% is not being taken is because I have a rule where I want a minimal 1-to-1 and where price gets moved up to the next liquidity target if the 1-to-1 has to be moved up. All right, so let's see how that ends up. So we have a nice take profit at the 25%, and eventually we get stopped out, which is totally fine. We had a very nice trade here. This was like $700 or something like that. And because I have a rule that I can trade twice, like as you can see, I've with my AMP Live account I can trade twice. I'm able to place an entry again here. We get entered again, and we hit our take profit of 25%. We move to break even, and then we get stopped out on the remaining contracts, and we end the day here. And with that, we actually made a very nice 1,300 US dollars on the last trading day. But I'm going to show you something what actually happens with me. Right now, this is how the trade should have been. And I noticed that with my personal account, there was a bug that I right now have solved in my strategy, where the take profits were not executed very well. So instead of 1,300 profit, I actually had a profit of 200. And why is that, you may ask? Well, I will show you. So let's get back to the 31st. Here we go. Let's hide the strategy. and you will see that my entries here is that instead of the layered take profits, I have actually bought 7 contracts here, sold 6 there, and then I got stopped out here. I bought 7 contracts here, and then I actually got stopped out without taking profits here. And that is because I saw, eventually I mentioned that I saw a bug um, in the logic that I programmed for counter trend trades, and that actually made me lose this trade. But I still had a nice day. I had like $200 in profit. But right now it's fixed, and every day when I see a small bug, I will just fix it. All right. So with that, with this trade, I actually had 4 trading days on December, and I ended the month with, I think it was $1,800 in profit with 4 trading days. So out of the 20 trading days that there are in December or in a month, I only traded 4, and I did a review on all of them, including this one. And with those 4, I managed to get a profit of 1,800, which is very nice. And I actually had my first payout. I grabbed my first payout from Amp Global. So when I finished the trading day, I immediately put in a withdrawal, and within a few hours, I actually got the withdrawal paid out. I From that $1,800, I actually retrieved 1,000, and with that, I also really want to personally thank ICT for putting out his content and having the patience and time to share his knowledge, because this everything that is being done here is solemnly what I learned from his 2024 mentorship, and I am extremely grateful. And it's actually changed my life. Like, I don't want to get too emotional about it, but I really want to thank him for that. Um, so yeah, ICT, you probably won't see this, but with your content, your patience, and your time with putting out the things that you do, it's changed my life. And now, before we get all theory, etc., I want to go over what will be the future of this channel. So I promised you uh, that I will be giving you a small thing for the future of the channel. And what do I mean with that? I will be trying to post a daily bias given in a quick YouTube short format around between 8:30 and 9:30 every day. So I will be posting my new day opening gap and new week opening gap biases and what I expect for that day. So in that regards, that you know how my algorithm, my programmed algorithm of the ICT 2022 mentorship is looking at the current day, and I really hope that you guys, well, will utilize that to your own extent. Um, so yeah, I hope that you learned something today in regards to trading counter trend opening range gaps with a higher time frame trend that is bullish. And yeah, if you have got any feedback or if you liked the video, leave a like, leave a comment, and well, I talk to you guys next time. Bye bye.